Hello everybody and welcome to the Canadian Money Talk. Alan is asking me to explain the difference between margin accounts and borrowing from a HELOC to invest and tax implications. So he also had a different question, so I will cover everything. So when you're borrowing to invest from any official source in a non-registered account to buy something that has either cash flow or an expectation of cash flow, the CRA will let you deduct the interest expenses from your income, tax deduction. You cannot deduct interest in a registered account. Now, you can borrow from a HELOC, which is what he's asking for, secured by real estate, and as long as you're able to make interest payments, there is no problem. Now, if you can't, eventually the bank will come after your property to get its money back. You can also borrow from a margin account. So buying on margin is a trading strategy that involves borrowing money from a brokerage to purchase investment assets, usually security like stocks or bonds. The margin account has stocks and you're able to get money against those stocks, and that's when you start getting charged interest. Margin is only allowed on non-registered accounts once again. So you can borrow from either of those, and if it is in a non-registered account on something that has cash flow or an expectation of cash flow, you can have a tax deduction. Now, with the margin accounts, the brokerage will loan you a percentage, let's say 50 to 70% of what the stocks are worth inside that account, based on a formula that differs from brokerage to brokerage. Now, while with a HELOC, the bank will work with you if you can't pay the interest, the margin account will just add the interest to your loan. However, if the value of your assets goes down and the amount borrowed goes above the percentage that I mentioned earlier, the brokerage will initiate the dreaded margin call, where you either need to deposit more cash, whose percentage value is 100%, sell something, which isn't great if the stocks just went down, or the brokerage will sell random stocks for you to get the loan below that allowed percentage. Interest rates are also important. In late September 2025, Interactive Brokers had 4% interest or lower, while Simple had the second lowest margin rate for its generation members, over $500,000 invested at 4.2%, but higher with smaller amounts. And my Manulife HELOC is 5.2%, and my Q-Trade margin is 5.7%. So check your rates carefully. Borrowing to invest multiplies the percentage gains and the losses and definitely increases the risk, so be careful. With the margin calls, those are the investor's worst nightmare, so definitely try to avoid over borrowing.